Hey, it's Randy at Funeral Funds of America. In this video, I'm going to share with you the actual pricing for $15,000 worth of burial, cremation, final expense, life insurance, or funeral funds for a 63-year-old female. Now, first thing I suggest is going directly to our website, and on just about every page, we've got these free quoters, and you can just select the state that you live in, and we're licensed in all 50 states, by the way. Select the coverage amount you're looking for, put your birthday in here, your other info, click the Get Quotes Now, and it will take you to a page that's going to show you all the best insurance companies with all the lowest rates that you may qualify for. And what this will do was it'll help you with two things. Number one, it'll help you avoid those plans that you see advertised on TV and junk mail and, just magazines and all that stuff, where they have a really low teaser rate just to get you to call in, just to get you interested. And then once you get in, they actually raise the price up, right? So that you end up paying more. We'll also help you avoid those plans that have 2-year waiting periods that can be more than 200% higher in some cases than other companies. But to reach out to us, you can also call us at 888-862-9456. But really, the first thing you should consider if you're a 63-year-old female looking for $15,000 worth of insurance is that coverage going to be adequate for your final expense needs? Now, typically, final expense is going to be either cremation or burial. So the average cremation right now in the United States is right between $1,000 to $2,000. That's if you come home in a cardboard box or an urn. If you're going to have some sort of a ceremony after the cremation, then that's probably going to be anywhere in the range of $3,500 to $4,500. So as far as what we would recommend coverage-wise, if you're going to have that cremation where you come home in a cardboard box or an urn, most people will get somewhere between $5,000 to $7,000. Now, some people would say, well, hold on, Randy, because you said the cremation was $2,000, you're recommending $5,000 worth of coverage. Well, yeah, because you're 63 and you probably want to get to 73 and maybe even 83. And we know that the cost of a cremation today is not going to be the same as the cost of a cremation 10 years from now or 20 years from now. So we like to build a little extra coverage in there just to make sure that your policy lasts and you'll never have to add to it. So if you get a little bit more coverage, it's going to cover the future price increases. And God forbid you died a little bit sooner than you expected. There's a little bit of money left over to take care of some minor expenses, final expenses like maybe medical bills or something like that. Now, if you're going to get the cremation with the ceremony, then most people would get somewhere between $7,000 to $10,000. And again, that inflation proofs your plan. But if you died like early in the policy life, there's a little bit of money left over for some other things to go on. Now, as far as a burial goes, the average cost of a burial right now in the United States is right around $10,000. So if you walk into pretty much any funeral home in the United States with a $10,000 check, they'll get it done for you as a rule. But it's hard to imagine that they would turn down a check for $10,000, let you walk out the door and, walk down the street to one of their competitors and give them that money. But just understand, at $10,000, that's not going to be fancy by any means. That's definitely going to be a very simple funeral. And the other thing, too, is at age 63, it's not inflation-proofed at all. So most 63-year-old females would be looking at anywhere between $10,000 to $15,000 as a rule, and maybe sometimes $20,000. But keep in mind, you can always start with a smaller amount of coverage and add more coverage later. So if things are kind of tight financially for you, which most of the people we help are on a fixed or limited income, you're better off if you had to get the $10,000 right now. That takes care of your most immediate needs. And we can always circle back in a few years and look at adding more coverage. Now, one thing sometimes people want to do, and we hear, is they'll tell us, hey, I want to get $50,000, $40,000 or $50,000 because I want to leave some money for my kids. And typically we recommend against that because the premiums get more expensive. And sometimes somebody will say, well, if I can't get $50,000, I'm not doing anything. And we just kind of think that's kind of hard on the family, right? Because if you can't do the entire $40,000 to $50,000 because you chose to wait this late in life to get this insurance and it became expensive, then that's your fault. And now you're going to make your family pay for your mistake because they will have to pay for your funeral or final expenses. Most of the time, they're going to have to put it on a credit card at 26% interest. So we just encourage people, don't be ornery. Just a lot of times this final expense insurance, you're better off just getting what you need and be happy with that. So yeah. Now, one thing we always recommend is first day coverage or benefits. We never recommend those 2-year waiting period plans. And we'll talk about that in a minute. But yeah, what first day coverage means is, hypothetically, if your plan started today, meaning it was approved and everything went in force today, and you died tomorrow, the insurance company would have to write that check for $15,000, $20,000, $25,000, whatever it is. It's the best coverage at the lowest price. Now, some people often might say, you know, Randy, I like that first day coverage, but I'm not in the best of health, so I'm not sure if I qualify. And, you know, we always just say, hey, that's our problem, not yours, at least insurance-wise. And that's why we work with so many different insurance companies, and they all have different underwriting, and they all have different health questions. And really, 90 to 95% of the time, we are able to get people first day coverage or benefits. Really, the only reason we wouldn't be able to is if they had some really significant health issues going on, like maybe they had a terminal illness and they're going to pass away in the next 12 months, or dementia, or they're on dialysis or in a hospital or in a nursing home. If that were the case, we'd probably refer out to a different insurance company. One thing that seems to happen every week with us as well is somebody will call up and say, hey, we had a loved one pass away this last week, and they didn't have insurance and we don't have the money. Now their body's down at the funeral home, and the funeral home director's not going to do anything till he gets a check in his hand. So we need to get this insurance really quick so we can get a check from the insurance company to pay the funeral home director. We have to let them know that there's no insurance company in the United States that's going to issue a policy on a dead person. You have to be alive to qualify for this insurance. And it's so sad that the person who passed away, you know, they didn't take care of this. They knew they were going to die someday. They probably even looked at this insurance in the past and didn't do anything about it. And then, you know, they just done ran out of time, right? And now their family has to deal with it. And most of the time their family's going to have to put this on a credit card at 26% interest, and they're going to have to pay off your bills. They're going to have to pay off your final expenses, something you should have taken care of. They're going to have to pay that off over the years at 26% interest. So don't do that. Don't let that be the legacy that you leave behind. Care enough about your family to get this now before it's too late. If you can't afford everything you want, just get what you can afford right now. We can always help you add more coverage later. Yeah, just don't be that person. Now, one thing we don't recommend is plans with 2-year waiting periods. And Colonial Penn is probably one of the more well-known companies. Did you know their $9.95 plan is a 2-year waiting period? Ouch. Yeah, ouch. Yeah. And they're not the only one. There's other companies out there like Mutual of Omaha, United of Omaha, AIG, Gerber, just a host of other companies that the only thing they sell is 2-year waiting period plans. So, yeah, we just don't recommend those. But some of those companies have done such a great job of convincing the American public that if you're over age 50, the only thing you qualify for is a plan with a 2-year waiting period, to which we always say, don't fall for such nonsense, because we help people with first day coverage all day long. Now, you know, our 63-year-old female is probably watching one of those Colonial Penn $9.95 commercials thinking, oh my gosh, you know, I can get so much coverage for $9.95. I can probably get $20,000, $30,000, $40,000. I bet I can even get $50,000 for $9.95. And then, you know, they go and talk with a Colonial Penn agent, or they go online and, you know, like we've done for you here, and they see that 1 unit of coverage, $9.95, for a 63-year-old female is only going to pay out $1,370. Now, $1,370 might be enough to cover the cost of a cremation in most parts of the United States, but not with Colonial Penn, perhaps, because they've got a 2-year waiting period. It's not even going to pay out for 2 years. Oh, yikes. It's not going to pay out if you die of a health or medical reason in the next 2 years. So why would you get a policy that's so marginal, that's already kind of putting you behind? And certainly $1,370 is not even going to come close to paying a funeral. So, yeah, I mean, some people would say that, you know, companies out there, they offer these low teaser rates not to actually sell you that low rate teaser plan, but actually to get you to call in and just get you on the phone or get your information and then try to upsell you to more profitable products for them. And we would never say that about Colonial Penn, but you know, you may just want to kind of formulate that thought yourself based on $9.95 buying $1,370 is all. Yeah, but let's do this. We're looking at 15,000. So Colonial Penn sells by unit. So we've got to you got to kind of guess and just goof around with this to come up with as close to 15,000 as you can. It's not 13 units. It's not 12 units. It's 11 units. There we go. Now with Colonial Penn, you can't buy $15,000 on the nose for a 63-year-old female because they sell per unit, not based off coverage. So you're going to end up with $15,070. And evidently that $70 is important for something. Maybe you can buy another rose or two or three or something. But anyway, let's do this. Let's go find out what first day coverage would be for $15,000 and see if we can save you some money. I know we can. Here we go. There we go. And we're going to jump back here again. This is $15,000 for roughly $110. And here we go. We can do $15,000 for roughly $54 to $55. And there's three companies that are all within, 75 cents. And we would definitely have an opinion, which company is going to be best for sure. And the reason is some companies take longer to issue. Some can take days. Some can even take a month or so. Some are just a little bit more problematic getting people approved because they have more strict underwriting. They ask more detailed questions. So we can definitely help you get in with a company that's going to be better. But if you take a look at this, let's just choose this company here, Trinity. Level coverage means first day coverage. It's $55 for $15,000 versus $110 for $15,000 and $15,070, but close enough. So you'll see that the Colonial Penn is almost 200% more expensive. So why would you ever buy a plan that's like 200% more expensive, and they're going to sock you with a 2-year waiting period, and you will have to continue to pay that $55 over, you'll overpay $55 for the rest of your life. Why would you ever do that? If you take that $55 and multiply that times 12 months, that's $660 more a year. And if our 63-year-old female makes it to age 73, you will have overpaid $6,600 roughly on a $15,000 policy. Why would you ever do that? Why would you ever do that? Just keep that money in your own pocket. Don't get an expensive plan that's going to charge you a 2-year waiting period and you're going to overpay every month for the rest of your life. Just get something that's going to get you first day coverage and lower rates. And in this case, you'll save right around $6,600. And we know that that money's better off in your bank account than an insurance company's account. Let's look at some other companies though here. And you'll be able to check out all these different companies. So here we go. Oh, here's one. Lincoln Heritage. So they're a fine company, I guess, but look at that pricing. $78, yikes. Level, so it's first day coverage, that's good. But yeah, Lincoln Heritage has got a deal where when you pass away, they will supposedly call 2 or 3 different funeral homes on your behalf to get the lowest pricing, maybe do a couple other things. But they charge money for that. It's not free. They charge money for that. And that money comes out of your pocket. So let's basically $79. We're going to round up. 79 versus 55. That's $24 a month more. So that is roughly right around $300 more a year. And if our 63-year-old female makes it to 73, you'll have overpaid right around $3,000 more. So you got to ask yourself, is it worth paying a company almost $3,000 more to make 2 or 3 phone calls and do a couple other things that might only take an hour or so? A lot of people would say that's a pretty good payday for an insurance company. We would tend to agree. We'd rather you keep that money in your own pocket. So what we do is we say, go for the lower rate. And then what we do at Funeral Funds of America, we have a funeral and estate planning guide that you can download from our website and then print it out and then just complete that. And in that funeral and estate planning guide, you just say who gets what and what goes where and what happens after you're gone. And then you keep that with your insurance policy. And now your family, all they have to do is open that up, read through it, and then execute your final wishes. And they don't have to think about a thing. You've taken care of everything. They know everything to do, and you provided the funds to do it. And what a wonderful gift to leave behind for them. What a wonderful legacy to leave. And they will know that you not only love them in life, but you actually love them when you were gone. And you not only took care of them when you were alive, but you took care of that one last thing, that most immediate need after you're gone that you knew would be such a burden for them. What a wonderful legacy to leave behind. So go to funeralfunds.com. We've got a special quote for our YouTube viewers, funeralfunds.com/YouTube. And you can get the best rates and discounts on that quote. You can also call us at 888-862-9456. But if you've got an existing policy and you want to price shop it to make sure you got the best deal, we can help you out with that. If you have an existing policy and you want to add coverage, we can help you out with that. If you're just looking for brand new coverage or just even have some questions about what's out there and what you might qualify for, we can help you out with that as well. So we look forward to helping you get the most amount of coverage for the least amount of money. We will be blessed to help you with this in the future. Until that day comes, you stay safe, you take care, you have a nice day. Bye-bye.